Uh, so, um, what is the rating that your firm give for the Northern Trust Corporation, and why do you give that rating?
We currently have a hold
Mm.
on Northern Trust,
Mm-hmm.
and the hold as opposed to the buy is really driven by valuation. It's a very good company with really good growth prospects,
Mm-hmm.
but it also has a much higher valuation PE multiple than its peers. I think it's kind of priced appropriately.
Mm. So what is the target price of the company?
Honestly, I'm not in the office, and
Mm-hmm.
we're in the process of doing earnings previews, so that's all in the works. So I'm not actually sure off the top of my head.
Okay. But what is the general expectation that you think its price is gonna be in the following 1 or 2 years?
Well, for us, anything with expected upside of 10% or more
Mm-hmm.
over the next 12 months is a buy, and we have a hold on it. So it's something less than 10% over the next 12 months is kind of our expectation.
And what are the factors that make you make this kind of expectation?
Well, the good news for Northern Trust is
Mm-hmm.
they are somewhat uniquely positioned to kind of be able to offer all the services of their larger competitors, of kind of the big boys, kind of have a full service offering, but at the same time, they're quite a bit smaller than like a State Street or a Bank of New York, some of their competitors. I think they're in a good kind of position to kind of gain market share,
Mm-hmm.
kind of the law of large numbers. They don't have large numbers yet, so I think it's kind of a combination of a strong brand and a small market share, making the fundamental business prospects look really good, but it tends to come back again to that's just you would have to pay a good 3 or 4 multiple premium to peers to get that, which seems fair to us, but not really attractive enough to say you need to buy it here.
Mm. So, what do you think are the major outside factors that are influencing the corporation's stock performance?
Well, one is
Mm-hmm.
their businesses are fairly market
Mm-hmm.
centric, meaning if the stock market's up or down, they'll have that's up stock market is good for them, bad stock market is not as good. So they are, at least to some extent, just subject to the overall market operating environment.
Mm-hmm.
That's kind of the one, at least near term one. On a longer term basis, we've seen kind of growth in the securities market exceed GDP growth for decades, and as we look forward to the extent that continues, I think that's kind of that's an assumption we're making that will continue, but that's kind of an outside impact as well, as to the extent that the securities markets keep outgrowing GDP. That's a nice growth driver for Northern Trust, which is a big trust and custody bank, and really that depends a lot on the rest of the world developing kind of a stock market and bond market like the United States has, which we're seeing in Europe, but I mean it needs to kind of spread into less developed Europe and into some of the emerging markets too. So that's kind of on a longer term basis an important kind of macro thing that affects their business and their stock.
So, what about the fiduciary rule, the recent update on the fiduciary rule and the rule's future? Would that have any impact on its future stock performance?
I don't think so. I don't think that has much of an impact for Northern Trust for 2 reasons. One being, the fiduciary rule has been kind of almost here for a couple of years now, but it's actually yet to been fully implemented or adopted. So we're not exactly sure what the rule will end up being. But secondly, and probably more importantly for Northern Trust, their kind of wealth management business is focused on kind of the ultra high net worth, I call them elephant hunters, right? But it's people with 10 million or more investable assets. When you get to those size kind of investors, you're pretty much, I think, already working on a fiduciary kind of basis. So I think kind of their business dealing with ultra high net worth investors who tend to be a lot more sophisticated, it's they're in order to satisfy their customers, I think they're pretty much already operating on the fiduciary rule, even though it's not, technically enforced yet.
And in terms of the corporation's current franchises, like the wealth management and the foreign exchange trading and banking business, what is the one that you think are most competitive and like performing satisfactorily, and what are not performing very well and you think need to be improved?
So I think the asset servicing kind of business, the custody and trust, is performing really well relative to peers. But that's really the business where they're smaller, so they can kind of gain market share. So I mean, that's kind of the one that's been performing, I think, better than a lot of their peers. It's certainly growing a lot faster competitively. I'd say their biggest challenges are probably, divided between, as you mentioned, FX trading. They lagged a bit there, but also on asset management. Not that asset management hasn't done fairly well, but that's a tough business right now, and I don't know that they have necessarily differentiated themselves as well as they have on the servicing business. So those are two areas, both FX and the asset management side of the business. I'd like to see them perform better in.
Could you explain more on the asset management business that you think, like, what kind of aspects do they need to improve on?
Well, they're very good and big and passive investments, right? So S&P 500 index funds and things like that, right? So that's an area they're very good. They're getting bigger in ETFs, which is kind of an offshoot of passive, but it's something they were a little late to. So, I mean, I think they're making progress there, but they're still kind of behind the curve a bit on ETFs. I'd like to see them kind of making progress on exchange-traded funds specifically. And, I think there's, some opportunities to maybe, diversify the asset mix a bit, kind of away from just kind of equity indices, kind of to more fixed income and other products like that. I'm ready whenever you are.
And about its financial healthiness, do you think it's financially healthy? And about its the expense.
Ridiculously so, actually. Well, they're up till last year they were considered a significant. They were subject to more of the SIFI, the significant financial institution rules. That's because of their size and some regulatory changes. They're not subject to all of that like they were. But even with that, I mean, they've got a lot of capital. And actually, I think they've got more capital than they need, and they're generating strong earnings. And they've got a lot of cash. They're very liquid, but they're generating cash flows. So I mean, you always have to worry about financial strength and health. But they're one where, of the companies I cover, they're at the bottom of the list as far as ones I worry about, because they're really strong, almost across the board there. And that partially comes from, they've got and always have had a pretty conservative management team. They just tend not to stick their neck out on the balance sheet or leverage or things that can typically get banks in trouble. They are very careful about, not sticking their neck out too far.
And they are in the process of cutting their expenses. Do you think that's the right direction to do?
Yeah, I think they need to get more efficient. It's not so much just cutting expenses, because, I mean, as I said, they're growing a lot better than their peers, a lot faster. If you're going to grow, you kind of have to invest some and absorb some costs. But I think they could be more efficient. I'd like to see the efficiency ratio, right, or their revenue or their expenses is a portion of their revenues continue to go down. That's kind of been the missing piece for them. they get revenue growth better than peers, but we just don't see it all necessarily fall through to the bottom line yet. And that's something I think they're doing a lot better with it than they were pre-crisis, you know. And so I mean that they're progressively improving there, but I think they still have some room to go there.
So do you think they are trading at a fair price right now?
Yeah, I think so. I mean, it's close to me, right? They're not far away from trading. It's something I would find undervalued, but I think they're trading at a fair price now. But it's close. They're close to being undervalued, just not quite there yet.
Okay. Okay, and that's all my questions. Thank you so much. And can you send me some of like the research paper or like the earning reports that your company generated after the last earning close of the company?
I think I can. The only issue is we only deal with institutions, so I have to make sure that I can send it.
Okay,
if somebody is not
it's
in institutions,
fine.
I think it'll be okay, but I'm gonna have to check to be sure.
Okay, so can I send you an email afterward and to see whether, I mean, if it's not, it's totally fine because your interview, like, you have already given me lots of information. And
Okay,
I really
if you send me an
appreciate
email, that'd be ideal, and I can reply to it either with the research or with an explanation. I can't imagine it's not going to be okay that I send it to you, but I do have to make sure.
Okay, thank you so much.
Okay, nice talking to you.
Have a good night. Thank you.